In today's video, we're going to be talking about the difference between a tax preparer and a tax planner. Let's talk about it, Daniel.
Yeah, so we get this a lot, and especially when you talk to people, they're like, well, I only pay my tax guy $1,200 or something. And they just can't get it out of their head that it's not the same thing. So let's look at this, right? So we have a tax planner versus a tax preparer versus a tax planner, right? So if I'm paying someone $1,200 or whatever it is to prepare my taxes, just realize this is a historian, right? So they're not doing anything proactive. Now they may find one or two things where like, oh, if we note this properly on your taxes, that'll mitigate the tax treatment because, let's say they noticed, oh, you didn't take QBI deduction last year. Let's make sure we take it because you qualify. Boom. That's a good tax preparer, right? But they're not proactively saving you on taxes. And again, if you're asking your tax preparer, well, how do I lower my tax bill? It's like you're asking the wrong question. It's too late, right? Get a time machine. So a tax planner is going to find you ways to save now, okay? There may be something retroactively, but again, if a tax planner can save you, let's say $30,000 in tax and it aligns with your goal, and let's say they charge you, now this isn't typically our fee, but let's just for simplicity's sake, let's say they charge $10,000, and let's say their fee to do the tax prep is $1,200, right? So when you look at that, your net ROI, so return on investment, is what, 18,800 if I'm doing that math correctly. So you're up 18,800 and here you're down. So we had someone that I remember was talking to you, Sam, where they're like, well, I only pay my guy $1,200. This just seems so enormous. I know you guys seem to be doing more. He just couldn't get it out of his head that you're not paying for a tax preparer with some nice little feathers. You're paying for a planner, a strategist. And it's so different. So when you see the difference here of like, okay, you're out $1,200 and you just paid, an extra 30 grand in tax versus someone that saves you 30,000 in tax. They have their fees. The net ROI is 18,800. I mean, it's kind of a no-brainer, right? So from that aspect, you just have to remember if your tax guy or tax girl is not meeting with you and you're not paying for tax planning, don't expect tax planning if you're not paying for it. But if they're not meeting with you and finding ways to mitigate taxes, you have a preparer, you don't have a planner. So you just have to remember there's a huge difference and the value trade-off. Oh, I only have to pay $1,200. Yeah, but you're not saving anything. Versus, oh, I'm paying anywhere from 7 to 10. What are you getting in return, right? So huge difference. Everyone's situation's different, but let's just say, I'll give you an example. We had a client where he gave us his tax return from his preparer, and we noticed that he had a partnership, and then that partnership paid his S-Corp, right? And so he had his S-Corp, and he had a partnership. What was weird is we noticed, okay, well, you're getting a W-2 here, but then you're paying yourself some W-2 here. What we did is we said, hey, screw having W-2 here. That doesn't make any sense because he wasn't getting the full QBI deduction. Right? So when we said, okay, this year, no W-2, pay all the services that you render to this partnership that you were going to get within your W-2 and everything, pay it within your S-Corp, then have your W-2. Now you qualify for the full QBI deduction because he was in a field where he was able to take the full 20%. We did the 401k through his business and a profit sharing, right? So I spelled that wrong. Profit sharing. So at the end of the day, he was able to save $80,000 in taxes just by that type of restructuring. And we weren't even going into anything else like defined benefit pension plan. We weren't doing, oil and gas. He could have done probably the Augusta rule. He could have probably done the accountable plan, right? There's just so many other things that he could have done. But this was like, okay, well, clearly you're not even structured. So we got them all done there. And now someone like this could look at this and be like, okay, I'm really underpaying for this tax planner because they're getting me 80 grand and maybe I only pay 10 or even 20, right? So that's kind of the stuff a tax planner would do. A preparer would just say, oh, okay, you got your partnership and how's your S-Corp? Okay. And they just keep doing it. They don't look at, is this tax efficient? Is this optimized for taxes? They're just like, all right, here you go. They may have some tips, and say, hey, next year maybe do a SEP IRA, right? That could lower your taxes a little bit. Okay, thanks for the tip. This tax preparer may give you this tip, right? But they're not really looking at your goals, right? What are your goals? Like for this client, he wanted to accelerate his retirement because he's 61, right? And so we actually found that, he wasn't even fully utilizing his 401k to the max. And he had the cash flow to do it. So he was able to defer more and more taxes. Later on, he may want to do a Roth conversion, right? So that's another thing. Or he might want to do the backdoor Roth if he has enough to do that. But again, a tax planner should be looking at your goals and what are your target. Whereas a preparer, they don't really care. They're just trying to get the tax return done. Nor really should they, right? Their key focus is to get your 1040 or your 1120S or your 1120 or your 1065 returns. They just need to get it done, right? They want compliance. They are compliance driven, right? Whereas we are goal driven. So super different. Now, ideally, you want a planner that's also your preparer, because at the end of the day, the end result is the tax return. So if you have a tax preparer that's like, I don't understand what your tax planner is doing, get them the heck out of there. Have the planner if they want to, right? Because there are a lot of planners that don't want to do tax returns, and I don't blame them, because half the time I don't want to do them, but it is so integral to planning is the tax prep. We know how it's going to look in the tax return. We do get frustrated with some of these tax planners because they're historians, they're also not proactive. So a lot of times they're doing the books after the fact, or they're collecting all the data after the fact. So it's not efficient. It's really like, working in the Stone Age when you can be working in the digital age and have so much more transparency. So highly recommended to, not just get a planner, but also a planner and a preparer